Crypto investors are in a panic. After months of questioning whether or not we're actually going to get an alt season or not, crypto markets are pulling back after the Fed announces rate cuts. Something seems wrong, but actually, this is right on time. In this video, I'm going to break down what this pullback is, why you shouldn't worry, and why this might be the last opportunity you have to buy at these prices. If that sounds good, like and subscribe down below, give me 10 minutes, and let's find out just what is going on. All right, guys, so unless you've been living under a rock, you would know that crypto had a pretty aggressive pullback today. We saw Bitcoin down almost 5%, Ethereum almost down 10%, and other alts bleeding as much as 15-20%. Investors are spooked. The Fed just cut rates. I thought we were supposed to be bullish. This is normal, actually. This is the weakness in September. September is the worst month for crypto by far, and that weakness is usually backloaded. So the last about 10 days are typically very bad for crypto and digital assets, quite frankly. I don't know what it is. There's always reasons why, and we'll get into that. But September is typically the worst month, and all the biggest investors know this, and they've probably prepared for this, and they're probably selling right now. They're probably taking profits and locking in gains before the market goes down. So I got Anthony Scaramucci here, one of the GOATs. He's going to break down what he sees in September. About 30 seconds. Have a listen.
Yeah, listen, September's typically the worst month for the cryptocurrency businesses. Some of it has to do with tax selling. Some of it has to do with a big run-up that's taken place in the last couple of months, Andrew, but I think long-term, Skybridge still maintaining his $150,000 price target for Bitcoin by year end.
So Scaramucci thinks we're going to hit 150K Bitcoin by year end. The short-term price action doesn't matter. And that's something I'm really trying to hammer home with you on this channel. This channel is about macro. This is about zooming out and looking at the big picture. When in doubt, zoom out. There's a reason for that saying. I want you guys to not worry about these short-term dips as long as we know we're going to have long-term rips. Love a mnemonic device. And so have a look, guys. I've got some good charts here for you. Check it out. This is average monthly performance for Bitcoin. Look at September. Almost 5.5% on the monthly average, well below. I mean, the monthly average here, just since 2023 or since 2010, we're sitting at about 15% on average. So we're down 20% from the average on September. So September far and away the worst month. And you can see here, September just not looking great. I mean, minus 20% in 2014, plus 14% in 2019. Not great, really not great. But this is an opportunity. This is an opportunity for us to add to our bags. Matt Hogan, Chief Investment Officer at Bitwise, they're one of the Bitcoin ETF issuers. He thinks that this is actually a great opportunity to add to your positions. Check out what he has to say.
And I think there's an even bigger story in ETFs where the flows, from my perspective, are set to accelerate strongly into Q4. So I am still feeling bullish about this market. I take this pullback as an opportunity and not a setback as we move into Q4.
So this is an opportunity for us to add to our bags. Throughout the years, there's always a reason why, and there's always a stark pullback, bear market continuation, correction before Q4. 2024 was flat, resilience due to China stimulus. Keep an eye out this week. I'm going to do a video on the China liquidity stimulus that's coming into markets. They have a big role to play in this bull market still. We're going to break down what exactly that looks like and why you should be very bullish on China. Have a look to that later this week. But let's get back to this. 2020, COVID liquidity strong, only a small dip. 2021 correction before Q4 all-time high push. So there's always a reason, guys. There's always a reason as to why this dip happens, but what's important is that it does happen. So why is it happening now? What's the deal this time? So guys, the reasons for the pullback this time, there's a couple reasons. It comes down to liquidity and the dollar index. So let's jump in. So this is the U.S. Treasury cash balance. So the TGA, the Treasury General Account, this is the United States checking account, essentially. And what happens when they reach the debt ceiling? They can't issue any more debt to fund the government. They pull money out of their checking account. This is an injection of liquidity into markets, and it's bullish for risk assets because they're adding money to the financial system. On the flip side, when the debt ceiling gets extended and they're able to issue more debt to fund the government, they have to refill their coffers. They have to put more money into the checking account. It's happening right now. Right now, we're at 515 billion. We've got to go up to about 850 billion. So they're pulling about $350 billion out of the financial system to rebuild the Treasury General account. This is a drain on liquidity, and you can see the connection to the S&P, just risk assets in general. It's the same for crypto. As the Treasury General account comes down, as money comes out of the checking account and into markets, we see the S&P perform better. as the Treasury General account gets built up, as they take money out of the financial system and put it into the checking account, the S&P goes down because you're pulling money out of the system. So this makes perfect sense to me. And once they get up here, this is our final hurdle for liquidity as far as I can tell. After this gets back up to 850, we are smooth sailing for liquidity, and it's going to be up only in terms of global liquidity. And so the other reason, guys, is the dollar index. This is the strength of the dollar. And there is a correlation here between the dollar strength and global liquidity. This is important for you to know. As the dollar goes higher, global liquidity comes down because the dollar is the global reserve currency. And so all the other currencies are weighted against it. And so when the dollar goes higher, this basket of other currencies becomes worth less because the dollar is worth more. On the flip, as the dollar becomes worth less, the other basket of currencies become worth more because the dollar is becoming worth less. And so they are now, the weighting against that dollar becomes less. And so they actually go up in value. So even though no currency units are being added into circulation because of this, global liquidity rises because the dollar goes down, making all these other currencies worth more. It makes these other currencies worth more. And so what we're seeing, and what we've seen, is an increase in the dollar. We went from 96.6 up to 97.6. We did have a little slight drop down to 97.3. Now we're back up to 97.4. So we went from essentially, as far as where we're at today, 96.6 all the way up to 97.4. That's where we're sitting. This is an increase in the dollar strength. It is a decrease in global liquidity. And since markets are really responding primarily to liquidity right now because we don't have an accelerating economy, liquidity is going to affect markets much more strongly. And so have a look. We got others and the dollar index. And you can see the correlation right here. We got the dollar index here in white and we have the others here in red. As the dollar goes down, altcoins go up. As the dollar goes up, altcoins go down. Because as global liquidity rises, altcoins rise. As global liquidity falls, altcoins fall. This is the connection. And this is an important distinction to make. When you realize what this is actually creating, when you realize the actual reason for the market going down, it's because the TGA is getting rebuilt. Okay, that is going to stop sometime soon. They're going to rebuild it to 850 and then they're done. And then the DXY creeped up just a little bit, but overall the dollar is set to fall. The dollar is set for another leg down to allow the global economy to expand and to accelerate. A weak dollar is good for markets. It's good for global trade. It's good for everybody, including the United States at this time. And so the dollar is going to come down. The Trump admin is going to orchestrate that. That was actually a result of the Mar-a-Lago Accord. Anytime you see any kind of accord, it typically means that the dollar is going to come down. That's a trade agreement that they've reached with other countries. It's going to help everyone along. So this is why markets have fallen. So we know that there's historical weakness in September. We know that there's a reason for it. What lies ahead? Very, very bullish times. I got Matt Hogan. He's going to break down what he thinks is coming next, and then we'll dive into the numbers. About 20 seconds here. Have a look.
The big story in crypto is institutional adoption. That's still a trade that is gathering steam. So I would look at this sort of Bitcoin sell-off, this crypto sell-off we've seen this weekend, as an opportunity as we move into October, which is historically the best month of the year for crypto. So that's the big picture perspective.
So guys, the big picture perspective. That's what this channel is about, getting you to focus on the big picture. Step away from the day-to-day price action and realize what's really happening here. Institutional adoption, a very likely scenario of regulatory clarity in the United States for crypto and digital assets, rising liquidity, an accelerating economy, a rising business cycle. Very, very bullish. I don't care what happens in September. I just don't. And neither should you. So let's dive into this. Let's take a look at how October does. We got 2023 up 30%, 2022 up 5%, 2021 up 40%, 30%, 10%, minus 4%. We'll ignore that. Up 50%, up 15%, up 30%. Let's have a look at November. Up 10%, down, up 40%, down. But you can see that November 2021, a little bit of a dip. 2020, very bullish. 2017, very bullish. 2013, just insanely bullish. I don't even know what that's about. That was early in the adoption curve there. So you're seeing that there's a pattern here, and the rest of the year looks really good here. The rest of Q4 looks very, very good. Not only from just looking at this chart, looking at this chart right here, the Bitcoin seasonality average monthly performance, October 30%, November 40%, December 13%. Very bullish, guys. Very, very bullish. So if you're worried about this dip, if you're worried about this short-term price action, I encourage you to reconsider. I encourage you to figure out why it is you're in crypto in the first place. You have to find your own conviction. I can only help you find conviction. I can't give it to you. I can share my conviction with you and show you the road that you can walk down to have conviction. But the key to succeeding in crypto, the key to winning in these markets and coming out the other side a more wealthy individual is having the conviction to sit comfortably through the volatility and, dare I say, even add to dips. That's the purpose of this channel. And if you like that, make sure you like and subscribe down below. Leave a comment. Let me know if you've learned anything. As always, thank you for being here, and we'll see you in the next one.